Hi everybody, this is Tom Callaghan from Risk. Today I'm going to talk about cyber insurance coverage and how cyber risk quantification can help you to procure the best coverage for your business. Cyber insurance coverage is a really important information security control. It can help to reduce the probable loss from an information security event, and it's often overlooked by CISOs. In fact, some CISOs don't even understand how insurance is procured in the organization and who's responsible for doing so. So I would encourage, CISOs out there to work with your legal counsel or your CFO teams really to understand what's in your cyber insurance policy and how you can apply that to some of the risk scenarios that you're working to mitigate. So the right cyber insurance policy aligned to your business needs is a great investment. However, the wrong cyber insurance policy at best is a waste of money, at worst can give you a false sense of security, leading to some nasty surprises when you do suffer an incident. It's also important to understand that cyber insurance is actually an obligation for some organizations who are working with third parties, and more third-party management programs will request that you provide evidence of having the right type of cyber insurance in place. So how do you pick the right cyber insurance policy aligned to your business needs? The first thing to understand is how these policies are structured. The cyber insurance industry is actually relatively immature, but there is a reasonably consistent way in which policies are constructed. Most cyber insurance policies are built up using the idea of having an overall annual level of coverage. That coverage is further broken down into different loss types, and each loss type has its own coverage in addition to the annual coverage. It's also important to understand there's a retention or a deductible, and this retention also applies to each loss type. So let me give you some examples of the loss types that a cyber insurance policy will cover and the way it's articulated. Cyber insurance policies typically cover things like legal costs, the cost of data recovery, forensics, also things like business interruption costs when a key application is unavailable. But for each of these losses or costs, there will be a particular level of coverage and a particular retention for each type. So let's take an example. Business interruption coverage is when a service like an e-commerce platform is unavailable. Your policy will cover you for lost income for a certain period of time. But even though your overall coverage might be 5 million, your business interruption coverage might be, say, 1 million, and the retention might be 500K. So your actual coverage is really only 500K in that example, and not 5 million, which is what you might think by reading the headlines of the policy. So what this kind of means is that in order to get the best policy for your business, you need to understand the type of cybersecurity incidents you're exposed to. You need to think about for each incident what types of losses that might involve. And for each loss, you need to understand to what extent that loss might extend. What's the kind of probable distribution or range of that loss? Once you have this information, you can work with a broker. You can work with the broker to negotiate your coverage per loss type, your retention per loss type, and your overall policy coverage. And this is a super interesting tool. It's good both for organizations procuring insurance. It's also good for brokers to kind of identify the best policy for their clients and then work out how they're going to insure that policy afterwards with reinsurers. Now, it might seem kind of complicated, like, how can you possibly break down each of these incidents into the different loss types? But the good news is that the Cyber Risk Quantification standard FAIR actually already follows this approach and methodology. FAIR, within the taxonomy and the methodology, defines different loss types, and it allows you to think about a risk scenario in terms of different loss types and also identify a range of losses per each type. So by performing, a kind of a top 3, top 5 FAIR CRQ analysis on your business, that basically gives you the information to be able to work with your broker to put in place the best policy for your business. So thank you for listening to me today. If you're interested in learning more about cyber insurance and how you can optimize your coverage, check out the CIRISK blog. We have more information on CIRISK.com about optimizing cyber insurance coverage. And CIRISK, we have a solution to help organizations optimize cyber insurance coverage, in line with their business needs and also in line with what their third parties may expect of them.